Welcome back. This is Sage and you are watching the Sectoral Pulse by Kalkine TV, a special show covering all sectoral movements from the markets for the day. Australian shares were subdued on Monday as losses in gold miners and technology stocks were offset by gains in banks and miners that rose after iron ore prices firmed. The S&P ASX 200 index was down 0.13% at 7,052.20 after having gained as much as 0.2%. Weighing on the sentiment was a three-day snap lockdown announced on Friday in Western Australia's capital, Perth, after two people tested positive for COVID-19. The S&P ASX 200 is down by just 2.50 points today to 7,058.20. The bottom performing stocks in this index were Whitehaven Coal Limited and JB Hi-Fi Limited. And over the last 5 days, the index is virtually unchanged, but is currently 0.52% below its 52-week high. The top percentage gainers on the benchmark index were NIB Holdings, up by more than 13%, followed by Perpetual, that gained 5.5%. The top losers were JB Hi-Fi and Silver Lake Resources, down 3% each. And in other markets in New Zealand are closed for a holiday. Asian stocks rose on Monday with Chinese shares near 3-week highs as signs the world economic recovery was well on track bolstered risk appetite, while the US dollar slipped to a 2-month low. MSCI's broadest index of Asia-Pacific shares outside Japan jumped 0.3% to surpass critical chart resistance of 700 points and reach its highest since March 18th. The index has had a strong run lately as it clocked its second consecutive weekly rise on Friday and was on track for another month of gains. And since April 2020, the index has offered positive returns in all but 3 months. Chinese shares were firm in the blue chip CSI 300 index, up 0.4% to its highest since April. And South Korea's Kospi index rose 0.4%. Japan's Nikkei reversed nearly losses to be up 0.1%, and while Australia's benchmark share index was off a touch with a public holiday in 5 of the country's 8 states and territories. Risk appetite was whetted by early April manufacturing activity indicators out last week, which pointed to a robust start to the second quarter, with data hitting record highs in the United States and signalling an end to Europe's double-dip recession. Investors embraced the strong data, shrugging off earlier concerns about potential higher US taxes on capital gains under the Biden administration. And on Friday, US shares ended firmer, with the S&P 500 hitting a record intraday peak to end 1.1% higher. The Dow rose 0.7%, while the Nasdaq Composite added 1.4%. First quarter of US gross domestic product data is due later in the week, with expectations activity will have likely returned to pre-pandemic levels. And now moving on to the important sectoral updates. Heavyweight miners rose 0.5% to their highest since March the 4th as iron ore prices traded near record highs on strong global steel demand. The mining giants BHP Group and Rio Tinto also witnessed an upside. Banks rose 0.8% to their highest since February 26, with Bendigo and Adelaide Bank and AMP Limited gaining about 0.5%. Westpac added a percentage to market's third straight session of rises after saying it expects a $223.14 million net gain on its investment in cryptocurrency exchange Coinbase, offsetting a hit to the first half cash earnings of $282 million from provisions. Gold stocks were the biggest percentage losers on the benchmark as bullions declined on strong US economic data. The gold index slipped more than 2%. De Grey Mining Limited fell 7.5% and Evolution Mining Limited also lost 2.7%. Technology stocks declined as much as 0.6%, reversing course from a gain of 0.4% early in the session. Xero Limited and WiseTech Global slipped about 1% each. And now let's have a look at some important currency market updates. The dollar nursed losses against most currencies on Monday amid speculation that US Federal Reserve Chairman Jerome Powell will shun talks of tapering bond purchases at a policy meeting this week. The euro rose to a near two-month high against the greenback before data later on Monday forecasted to show an improvement in German business sentiment, which would bolster hopes for a brighter economic outlook. Powell is likely to face questions over whether an improving labour market and rising coronavirus vaccinations warrant a withdrawal of monetary easing, but most analysts expect him to say such talk is premature, which would put downward pressure on Treasury yields and the dollar. The dollar stood at 107.88 yen, close to the lowest since March 4th, and the euro rose to $1.2105, adding to gains made on Friday after positive data on European services and manufacturing activity. The British pound was quoted at $1.3876 following a 0.3% gain in the previous session. The dollar was little changed at 0.9136 Swiss francs, close to a two-month low. The Fed's next meeting ends on Wednesday, and while no major policy changes are expected, investors will pay close attention to Powell's comments after the meeting. The rising coronavirus vaccination rates and an improving economic outlook are reasons to be optimistic, but many traders and analysts say Powell is likely to reiterate his commitment to keep easy policy in place for an extended period. In emerging markets, traders are watching the Turkish lira to see if it will test its all-time low of 8.58 per dollar due to worsening relations with the United States and worries about a dovish central bank governor. The lira was last quoted at 8.4325. Elsewhere, the Australian and New Zealand dollars traded near one-month highs, but are likely to track moves in global commodity prices. In the cryptocurrency market, Bitcoin reclaimed the $50,000 mark and smaller rival Ether rose, recouping some of their losses from the last week, triggered by the US President Joe Biden's plan to raise capital gains taxes for wealthy investors. And moving on to the commodity market update. Crude oil prices traded almost flat today amid rising coronavirus cases in Asian countries. The Brent oil futures for July delivery traded at US $65.17 per barrel, down 0.38%, while WTI crude oil futures for June delivery traded 0.32%, down to US $61.49 per barrel. The prices were earlier boosted by better than expected April month's robust economic data on the US and Europe. However, rising cases in India, the world's third largest importer, has squeezed the energy demands. India has registered the highest spike in cases in the past 4 consecutive days. India has extended lockdowns for a week in its capital, Delhi. And Japan has also imposed a lockdown in Osaka, Tokyo and 2 other areas on Friday. The copper prices rocketed to 9-year highs amid ramped-up industrial generations worldwide, supported by the rollout of vaccines. The copper futures for July delivery traded at $4.36 per pound, up 0.29%. The prices of the red metal are supported by Joe Biden's mega US $2.0 trillion infrastructure plan. A better-than-expected US and Europe economic data released last week also contributed to a surge in copper prices. A surge in copper's demand for the green energy transition due to its wide applicability in electric vehicles, wind turbines and solar panels has also contributed to the copper bull run. Adding to this, financial institutions like Citi and Goldman Sachs also lifted their bets on copper consumption this year, foreseeing the red metal's wide applicability in a carbon-free world. Thanks for your time watching, and that is all for now, but do stay tuned with Kalkine TV for more live market updates. We'll be back with more news on the markets, economy and diverse themes and sectors. This is Sage signing off.